Hey guys, Kevin Burgess back yet again with another video, this time from an undisclosed location. So last week was an incredible week in the market. I mean, if you think about all that went on last week, from all the earnings announcements to the Fed raising rates by 0.75%, there was just a lot going on in the market last week, and it ended up being positive, and that's kind of freaky actually. So one of the foundations for this channel is that I want to be transparent with you about the portfolio. I want to show you not only what the balance is, but also what the transactions are, what I bought, when I bought it and sold it, how much of it I bought and sold, as well as any dividends that came in, just so you can keep track of what goes on there. I have 3 portfolios. One of those portfolios is more of an income portfolio for someone like me who has recently retired. Another portfolio I call the Dividend Growth portfolio. It's really more about medium term, looking out into the future. I want there to be a lot of growth there, but I also look for some dividend income. And then thirdly, I just started in the month of July what I'm calling the Dividend Snowball account. And that is for somebody that's just starting out, that's trying to figure out how this thing works. So I wanted to show you the results of all 3 of those portfolios this week. I've rearranged things so that I do it now by portfolio. So hopefully you like it. And with that, let's get started. Okay, you can see here the portfolio update for July the 29th. Just so happens it coincides with the end of the month. So tomorrow, I'm filming this on Sunday, July the 31st. So you can see that for the week, the portfolio went up by about $34,330. Of that, $157 was dividends. I did put $50 in the Dividend Snowball account. That is the weekly contribution that I'll make to that account. Therefore, the market change was $34,123. From a percentage perspective, the overall portfolio went up 4.0% compared to the S&P 500, which went up 4.3%. So still trailed the S&P by 0.3%, but I am totally stoked about that 4%. Now let's look at individually by portfolio. You'll see that the dividend yield portfolio actually grew by 4.6%. So it outpaced the S&P 500 account. So the dividend growth portfolio only increased by about 3.7%. Dividend Snowball account went up 4.4%. So it performed well against the S&P 500 as well. So overall, up 4.0% for the week. Now let's look at it on a year-to-date basis. You can see on a year-to-date, we have gotten $14,294.69 over a 7-month period. So pretty happy about that. That's about a little over $2,000 a month overall. And then from a market perspective, it's down $6,877.41, which is down 0.9%. So I'm still underwater by less than 1%. The S&P 500 is still down by 13.9%. Easy math there. We are beating the S&P 500 on a year-to-date basis by 13%, but still down just a little bit. This Dividend Snowball account I started on July the 1st and bought SCHD 28 shares, which was at that time about 80% of the portfolio. And I've talked about some of this on previous videos, but the 3 stocks that we chose to put into this account in addition to SCHD was Alphabet, which is Google, Microsoft, and Starbucks. So we've been putting $50 a week in this account. $20 goes to purchase Microsoft, $20 goes to purchase Google, and $10 goes to purchase Starbucks. And you can see that each week we have put that money in. There is a transaction I'd like to spend just a second on. It's on July the 21st. You can see that I bought SOXX. You can also see that on July 21st, I sold some SCHD. I felt that SCHD, for a longer term dividend snowball account, has a lot of higher yielding stocks in it. I wanted to back that down a little bit and go towards something that I thought was going to grow more over time. And with all of the chip information going on, the CHIPS Act, and a lot of capacity going online over the next several years with chip manufacturers, I thought the SOXX, which is a broad collection of chip stocks, would be a great add to the portfolio. So I sold half of the SCHD and I invested that in SOXX, which is the chips ETF that I chose for the portfolio. So just to wrap up the Snowball account, you see that we have 57 cents in cash. So everything that we're putting into this account is getting invested. The balance of the account is $2,828. So as you recall, this account has grown by 4.8% this month. It's got an annual income of dividends of $46. It's yielding 1.65%, and its dividend growth is approaching 12%. So we're going to keep doing this week by week and continue to grow this account, not only with contributions, but once the dividends start rolling in, we will be reinvesting those. So let's move on now to the next account, which is the dividend income account. This is the account where I'm looking for yield. I do plan to use some of this money to actually live on pretty soon. And so if I look at the cash balance, I've got $1,318.59 in cash. It's about 0.4% of this dividend income portfolio. So this portfolio is about 99.6% invested. So the balance as of Friday was $307,095. This is the first time that this portfolio has been above $300,000. So really excited about that. Annual income for this account is $15,623. The ultimate goal there is to get this to $24,000, but the next milestone would be $16,000. I'm hoping to hit that in the next week. Dividend yield is 5.09%, but my yield on cost is 5.41%. And then from a growth perspective, looking at a 6.4% growth. This is an interesting concept here because this dividend growth is intended to help me offset inflation. With inflation being, as high as it is, 6.4% is not quite enough. So we will have to see where inflation goes from here. I'm not too concerned about that, but it is something that's on my radar. Let's take a look at the purchases for the month. In this dividend income account, I bought IBM, Verizon, and AT&T. I did 6 transactions, basically 2 apiece. So I didn't realize it had worked out like that, but it did. So I added 50 shares of IBM in the month. I added 150 shares of AT&T, and I added 180 shares of Verizon. I didn't sell anything out of this portfolio this month. And in terms of dividends, I got $429.50. You'll see that New Jersey Resources came in on the 1st at $36.25. Best Buy came in at $88 in this particular portfolio. I do own it also in the dividend growth portfolio. But for this portfolio, it was $88. Altria Group, which is ticker symbol MO, I got $45 in dividends. Franklin Resources, ticker symbol BEN, got $29 on the 15th. Main Street Capital got $87.50 on the 15th. And last but not least, Philip Morris, ticker symbol PM, $143.75. Okay, now let's move on to the dividend growth account. You'll see I have cash in here of about $35,000, which is just a hair over 6% of this portfolio, meaning that I'm 94% invested. You'll see that the balance here is $572,000. The annual income is $14,700. My yield on cost is 2.8%. but I have a dividend growth rate here of 10.6%. So let's talk a little bit then about why I sold out of the position I have with Stepan Company, which is ticker symbol SCL, and I sold 80 shares of Cummins, ticker symbol CMI. So let's talk about the Stepan shares really quickly. I'll show you the fast graphs for that. The point here is that you'll see these green dots, and just as a side note, fast graphs has a portfolio tracking mechanism, and I do keep track of my transactions here. So any green dots that you see are purchases that I made, and any red dots are sales. But one of the things I like to talk about on this channel is not only the things that go well, but also the things that I could do better. And in terms of Stepan Company, first of all, I love the company. I think it's going to be something that I want to invest in the future. The issue that I had is that I entered this at the wrong point. You can tell that it had come down a lot before I entered it, but it was still overvalued in overvalued territory when I entered into it. So when it got back to where I was, I had a little bit of a gain on it. I went ahead and sold it. And it created some cash for me to buy some other things that might be on sale. But the key learning here for me is to make sure that when I'm buying stocks, just because they come down in value doesn't mean that they're a good buy. And so in this case, it was not a good buy. I've had, several months here of being, pretty good underwater. I sold out of that. I may look to buy into that again in the future. So let's talk about why I sold 80 shares of Cummins. What I'd like to show you here is that in Simply Safe Dividends, I can input each portfolio that I have. So you see here I've got a dividend snowball portfolio, a dividend income portfolio, and a dividend growth portfolio. What Simply Safe Dividends portfolio algorithm does is it creates for me an overall portfolio. So this is the my portfolio, and the beauty of this is that it allows me to see what my overall diversification is, because I may buy shares of stocks in different accounts. So I may buy Best Buy under the growth portfolio, and I might also buy it in the income portfolio. And so what this does is it kind of adds all those portfolios together for me so that I can see the overall diversification of my portfolio. So when I go down here, I see that I can sort this by percentage of my portfolio. I see Cummins still as the top holding in my portfolio at 8.2% after the sale of the 80 shares. So Cummins fell on hard times here a few months ago. I went ahead and bought more Cummins. I went overweight on Cummins because I was so fond of their business. And I just felt that it was oversold. So I went ahead and loaded up on Cummins. And as it had gone up over the last few weeks, it had gotten to be 9.9 something percent of my portfolio. So I have a rule that I want every individual stock to be less than 10% of my portfolio. So Cummins was almost at 10%. Since it had gone up quite a bit over the last couple of 3 weeks, and it was approaching the 10%, I went ahead and sold some of the shares to get back to a reasonable percentage of portfolio with Cummins. So now rather than it being 10% of my portfolio, it is 8.2% of my portfolio. I'm comfortable with that. I think that's a reasonable place for it to be. And it gets me more in line with some of the other investments that I have. So also, these are the most anticipated earnings releases for the week of August 1st. For me, there's really two on here that I think are of note, and it's because they're in my portfolio. I own a few shares of Starbucks now in the Dividend Snowball account, as well as in my Dividend Growth account, I own EOG Resources, which will be reporting earnings after the bell on Thursday. So I've got one more thing I want to do, and that is to scroll through my portfolio so you can see all of the holdings. I will show it to you in the consolidated form so that it's not confusing. So you'll get to see everything that I hold in my 3 portfolios. But before I go there, if you like videos like this, if this is interesting to you, if you could give me a like, that would let other people know that there's worthwhile content in these videos. And if you like to see this kind of stuff in the future, consider subscribing to the channel. I'd love to have you along for the journey. So I'm going to go to the portfolio. I'm just going to scroll through it, let you see it. If you want to look at it longer, you can pause the video. Otherwise, I will see you on the next video.